Welcome to Elite Broker, the podcast showcasing the leading players and stories of success from Australia's broking industry.
Hello and welcome back to this episode of Elite Broker. I'm your host for today, Annie Kane. And in this week's episode, we're continuing to go through some of the winners of the Editor's Choice Award from the Better Business Awards 2026. This week, it's the turn of the WA winner of Editor's Choice 2026 in the form of Max Miorada of Momentum Wealth, who was crowned Editor's Choice in recognition of his excellent customer service, his rave reviews from clients, and his work serving property investor clients with smiling service. So in this episode of Elite Broker, we've zoomed him in to the podcast to find out how he's doing it over in WA, what sort of things he's doing to excel with his clients, and what he's planned for his broking business in the future. Thanks for joining me, Max. How are you going?
Good, Annie. Thanks for having me. Couldn't make the trip over to Sydney, but zooming in from over here. So
it's a long flight, so I don't blame you, but we were super pleased that we were able to come over to WA for Better Business Summit and Better Business Awards earlier this year. And of course, at that award ceremony, I surprised you by giving you the Editor's Choice Award because it's one that you can't submit for. How did you feel to win? Were you prepared? Were you shocked? Were you surprised?
The second you started reading the biography, I sort of figured it out. So I didn't get as much of a shock, but no, I wasn't prepared. I'd obviously submitted for Best Residential Broker, which is a very competitive category. So I wasn't too surprised to not get that. There's some pretty high volumes in that category, but no, it was good. It's good to get that recognition. It's been a busy couple of years. No, it's good. It's nice to get up there. Always is.
Yeah. And I think I always feel slightly guilty about Editor's Choice because, as I say, it's just chosen from one of the finalists of the broker categories. And normally, because it's the second to last award, people might have had a couple of drinks. They might have, loosened the tie. They've kind of relaxed a bit. They're maybe outside chatting and then they're running back in being like, oh my goodness. So I'm glad you were in the room prepared. But I think the thing that really stood out for me in your finalist submission, and also when we kind of look at choosing Editor's Choice, we look at client reviews, we talk to aggregators, we talk to lenders, and we kind of go, well, is this person doing awesome things? And the general feedback was, yes, they are. But for anyone who's not had the pleasure of meeting you before, Max, can you walk us through your journey to becoming a broker? How long have you been broking for, and why did you become one in the first place?
Yeah, sure. It's a good question. Everyone has different journeys, of course. Mine started very much with what I was exposed to when I was younger. So my granddad, my nonno, because I'm Italian, and my dad were both in sort of property and finance. So exposed to it from a very young age. And naturally, as a lot of children do, they sort of gravitate towards doing or being interested in what their parents were. So I was exposed to that at a young age. And by way of that, I'd sort of always envisioned just going on and getting into finance. It was something I decided quite early. However, I didn't go to university, but when I did leave school, I figured I was too young to actually get into a finance role straight away. Too young to speak to clients and give people confidence, and didn't have much life experience under my belt. So I ended up working construction for about 5 years. And then also being able to, doing that was able to put me in a position to then go buy a house and get into the market. And it was about when I was 21, I decided I was ready and I'd had a bit of experience, done some traveling, a few Europe trips and all that.
Obligation, yeah.
Yes. Yeah. So got the travel bug out of me, got a house, and decided I'd had enough of hard labor. So I was actually doing commercial brick paving, which was actually quite enjoyable just because it was difficult. You were running around on site, carrying a lot of bricks. It was very... It was good labor work. So anyway, I did that for a while, made some good connections there. Like my biggest client is now my ex-employer. So it's funny how it goes full circle sometimes. Yeah. But it eventually made the jump. So I've now been with Momentum Wealth for, pushing 5 years. I've been broking for 4 years, and I started with them through a sort of trainee process. So do a 6-month sort of front-end training, and so learning the lodgement systems and all that, and then mentor or pairing up with a mentor, a broker. And then it's, all right, you're good to go. You can sort of fend for yourself and start broking now. So trial by fire, I guess you might call it. But yeah, that's sort of the general process and how I got into broking.
Well, it's a big brokerage. I mean, it's Damien Collins's brokerage, isn't it? Momentum Wealth. And I think,
Yes.
yeah, I think we've done the podcast with him a while back. If we have, I'm pretty sure we have. And looking at really specializing in property investment as well, I believe. So when
Yeah.
you started out broking, did you kind of already know Damien? Like, how did you get hooked up with Momentum Wealth?
Yeah, good question. No, Damien, but I knew Momentum Wealth is a good place for their training facilities that they'd sort of provide. Like they have really good infrastructure in training people with no experience versus some other brokerages. Like I know Aussie, for example, which obviously franchisee, but that's really a trial by fire. So you sort of jump in there, you don't really get too much, and you just have to fire your way out. Whereas Momentum, they give you a lot of, there's a lot of training infrastructure support. Like they really build you up to where you need to be. But then once you get there, you've got all the tools that you need to really do well if you want to and if you're motivated. So just for a bit of context for the listeners, Momentum Wealth, so we're not just finance focused. We actually act as a property advisory firm. So we provide investment strategies, finance, buyer's agents, property management. We have a research team, developments, and commercial and residential syndicates through our sister company, Westbridge Funds. So I guess the role's a little bit more diverse in that we're not just doing pure finance. We actually provide investment guidance to people, which makes it a bit more interesting. There's more to learn, more value I can provide to clients. There's more to do. And you're interacting with all these other services within the business.
Yeah.
So good place to start.
Yeah, and it sounds like, I mean, obviously it's a massive brokerage over there. And is it in Subiaco?
Yes, in Subiaco. So we've got seven brokers at the moment. Yeah.
Yeah, and really got a strong presence over in WA. When you first started though, when you were doing all the training, were you doing property investment advice? Did they kind of go, we want you to be doing, loan admin support? Were you kind of talking to first home buyers? Like what was the first 6 months looking like for you?
Yeah, good question. So it started just for loan admin support. So they're firm on wanting us to understand what the actual application process looks like from start to finish so that we, of course, you can monitor it better. You can jump in and help where you need to. And, you can't always assume you're going to have a good admin support staff there. There might be times between, people leaving and getting new employees. So you need to understand those fundamentals. So it's about maybe a month and a half to 2 months of pure admin support stuff. And then beyond that, you're paired up with the broker and you're essentially acting as their para broker.
Para broker, yeah.
Yeah. And the idea is that it's only taking you sort of 3 months to get up to speed, in which case you can start broking. But, some people can do it in, say, a month and a half if they're really driven, and others maybe it takes a bit longer. But that's sort of the general flow of the training process.
Just going back a step there, I mean, you mentioned that your family were both in sort of property and finance. Why was broking an attraction for you?
Well, my nono, he actually started one of the first finance brokerages in WA many, many years ago. And then the old man was part of that as well. So they were directly doing property finance, but they did some other stuff as well. And just not... Yeah, I sort of wanted to go out on my own and not really have, I guess, things handed on a silver platter for...
Do they still have that company?
They do, but the old man doesn't really work anymore. He's sort of been semi-retired for a while. So, yeah. But he still likes to make all the decisions. So I'd prefer to, do my own thing.
Carve your own path, but in the same industry.
Yes.
Did you always kind of know it was going to be broking after you came back from your construction job? Did you always know you were going to be a broker, or did you kind of consider other avenues?
Yeah, I always wanted to be a broker. That's what I had in my mind. Yeah.
So you'd gone through your training, you joined Momentum Wealth. I'm assuming you had to join the same aggregator that they were under.
Mm-hmm. Correct.
So you didn't have the choice of which aggregator to go through.
No.
When you were learning the ropes then, you're kind of getting all to grips with the industry, was there anything about it that kind of surprised you when you were just starting out and learning what broking was like?
Oh, it's a good question. I'd already gone through the finance process because I'd bought my own home. So I wasn't totally green. And I think just by way of what I'd heard and discussions I'd had with family members and, it wasn't all really, really new to me. I sort of could pick up on things quickly. So there's nothing that sticks out, to be completely honest. Boring answer, but can't really think of anything that, really sticks out.
You were pretty young when you bought your
Yeah.
home, which,
Yes.
congratulations. Not many young 20-year-olds are able to be in a position to buy a house. Did you use a broker for that?
I did. It was broker work for my woman, actually.
Well, there you go.
Yes, I did.
Just like kind of baptism of fire, like learning it by not only walking the walk, but talking the talk as well. How did you find the process of using a broker? Did you ever think I'm going to do that on my own?
Um, no, it wasn't. It was pretty. I didn't know much about, like, obviously hadn't been through the process before. So although I knew bits and pieces, it was still kind of new to me. So I don't know, just, it was a good process. I just sort of went through it. I wasn't super involved because that's when I was right in the midst of my construction role, and I actually got into a supervisor slash team leader role. So I was quite busy doing that. So yeah, it was a good process. But at that point, I knew I was going to move over, but it was still, a few years away. So I was kind of wasn't fully into it yet. Just sort of let it be and carry on.
Yeah. And
Yeah.
when you were starting out as a broker, can you remember what the first loan that you either wrote or settled was?
I can. It was so for context, when we first start with Momentum, the expectation is that you generate your own business through the database. So old people who've inquired, whether they've had a meeting or done loans 10 years ago, just go through the database and try to drum up business. There was someone I called on the database, and they hadn't done anything with the business for, I mean, 4 years, 4 to 5 years. And yeah, it was a simple refinance to cheaper rates. So when I started was sort of when it was just before rates started to come off the
Super
really
low.
low period. Yeah, the bottom. So it was a simple refinance to cheaper rates, and the customer wanted to potentially look at an investment property. So refinance, they had 3 properties, refinance them to cheaper rates, cash out equity, do a pre-approval, and that was that. But that was, it was 1.85 mil for the first deal between 3 properties. So it was a nice one to start. But there's nothing too complex about it. But my appetite was, what would you say? It's serviced by about $20 a month, and I was happy putting that through, which is
And
interesting for the first one.
yeah, and now with property investment, I think as well, like as you sort of mentioned, there, you're a full service financial service company when you're looking at property investment and advice. And so much of what property investors need when it comes to credit is that kind of advice of being like, if I do X, what happens to the rest of my portfolio, or what does this do for my servicing, or how do I kind of structure my finance in a way that means that I'm still able to actually achieve the ambitions and goals that I want for my life. Did you find that like kind of learning that side of things was harder than the actual technical side of broking, or like the actual kind of structuring a deal?
No, I don't think so, because there's not too many variables there is and isn't. There's only a few, like the main thing would just be, all right, not cross-securing assets. That's an obvious one, like no cross-collateralization. So the way that you structure that in terms of cashing out equity and using that to fund deposit and cost for purchases. And then, looking at things from a tax perspective, obviously without giving tax advice, but probably more so understanding that, like how the trusts and companies operate and where you're getting tax benefits and where you're not. And then knowing what information to give a client or to get from the accountant, what we should be considering, because I guess for the high income earners or business owners, like structuring things in a way that's going to be most tax efficient without hurting borrowing capacity. That's probably that's the learning curve there, is the companies, the trusts, and how that all works. But other than that, the general structuring, I mean, it's just no cross-securing assets, cashing out equity, that sort of stuff. So it wasn't too bad. I think it's just the learning for all the different policies with the banks and company trust lending, and then you get into SMSF and commercial and then development, and all of a sudden there's a lot more to learn. And actually, to loop back to your question before about if there was anything that I wasn't expecting or was interesting to me when I first started. It's probably that, actually. There's a lot more variation than you'd think, because outside looking in, if you hadn't really done finance before or worked with a broker much, you just think, oh, they're just looking for the best rate. But it's actually much more complex than that, of course.
Yeah.
Different policies for self-employment and full-time casual, and there's plenty there, of course. So that's probably the main learning curve, and that just comes with time. The more deals you do, the more you have to research, then the more you learn. So
and
very, very much time-based.
What a time, though, to be a property investment broker in WA, because WA and Queensland have both been booming the last few years. How many loans, have you seen that in your own personal business? People are just falling over themselves to get onto property investment in WA?
Yes. Yeah, it's madness. I joined at the perfect time, and that was just by coincidence. It's absolute madness. It's crazy. The amount of inquiries we get through the front end, people wanting to invest, is just insane. And one of the bits I put in my submission is the outcomes that we've achieved for clients is awesome. Middle income earners, or even lower income households generating hundreds of thousands and even $1+ million of equity in a few years' time, which is really nice to see, because you're making a tangible benefit to someone else's life. And we focus on, our investment strategy is focused on established property. We're not doing, home and land packages. We're not cross-selling stuff. It's a true investment strategy. So it's nice to see actually helping people and getting a good outcome. So it's been crazy busy. And it looks to carry on.
Yeah.
From what we're seeing, it's slowed down a little bit. Just people worried about rates and and energy costs and all that, but we're still getting lots of inquiries. So
how many loans do you reckon you write a year?
I have, so last financial year, there was 118 or so individual clients or households. So within that, I'd say there's at least, on average, I'd say there's probably two loans within each household, maybe 2 properties, or so whatever that looks like, 200 plus.
Yeah. So a fair chunk. To walk through then how you get through all of that business and actually manage to do it while keeping your sanity, I'd love to pick your brain about your process and operations, but we'll get into that just after this message. So Max, you've been talking there about, the sheer volume of loans, and obviously WA being an investment mecca at the moment. So many people are looking at trying to buy a property, an investment property, particularly in WA. Are all your clients local? Are they national? What sort of is your makeup of your client base?
Yeah, it's predominantly local. I'd say about maybe 85%, maybe even 90% of specifically my clients are WA based. And then the rest would be, only very few are out in the eastern states, or I guess other states in Australia. And then I've got quite a few that are actually expats living overseas, like New York, UAE. Where else? That's the bulk of it, actually. There's a lot of Aussies in New York and UAE and Singapore. So it's not a huge portion, but yeah, and mostly WA focused.
Yeah. And you talked about when you first started having to go through the data, the back book, and kind of recontact people, which I think, for a lot of people is a great way of getting started. And it's the hardest thing when you're a new broker, to try and find new business. How do you find it nowadays? Are you just walking around, going to property investment shows? Are you hanging out at open homes? What are you doing to find new business?
Good question. Most of it's through referrals. And initially, a lot of it was just coming from the business. So it was the database. Momentum Wealth has been around for 20 years. So there's a massive database just full of old leads and everything. So we've got that to access, and there's actually some gold in there. One of my first clients was someone very high up at a mining business I'd found on the database from 10 years ago. And they never did anything with the company. It was just a random cold call, and I ended up doing a refi for 3.5 and then helping them buy a home. So the way the Momentum is set up is they do really give you the infrastructure and the resources so that you can excel straight away. So I'm quite blessed. I don't have to do much client prospecting. No, it's mainly referrals. I've got good referral networks, but I'm quite selective with who I work with. I've pretty much just got one good accountant, one good financial planner. Just utilize that. I don't branch out too far. Just have a few people that I trust, and vice versa. And it's mainly just referrals from existing clients, and then new leads coming to the business who want to invest in property. Someone comes to the business, they want to invest in property, then it would get allocated to brokers who also provide the property investment advice based on who's most suitable. So most of the leads come from Momentum.
That was going to be my next question, was how do you actually win business within a brokerage that, if it is just walking through the door? Like, I always sort of think that's really interesting. Is it just like first come, first serve, or is it who's free, or is it, like the sort of alignment of what their strategy is based on experience? Like, how do they kind of determine who gets whom?
Yeah, good question. So we have a system where all inquiries come into a chat with the brokers in it, and we're essentially their investment strategy inquiries generally. So we need to get them onto an investment strategy if that's what suits them, or they might do finance, or they might just be after a buyer's agent. But essentially, our objective is to contact the customers as soon as possible, as soon as they put in an inquiry, because obviously the sooner you contact someone, the more likely they are to convert, in which case it's whoever's available at the time. And then there's between us that are actually in the chat and taking in the inquiries, because we only allow it as a business if you have a certain level of skill and expertise. Like, we wouldn't just let a brand new broker take leads off the front end. And we've got good relationships. There's good culture. It's very much, all right, I've taken heaps this week or this month. Someone else can take some, or I'm in a meeting, so someone else takes it. So we work together. There's enough business that we don't need to fight for it.
Yeah.
So it's very much whoever can contact them straight away, and whoever has a bit of capacity to actually take on the client.
You mentioned there about using a chat. So I'm always curious to see like how the kind of process works for the brokers. Are you using that like, is it WhatsApp, or is it in your CRM? Is it like a Kanban type platform? What are you using?
Yeah, that's a good question. So the leads come from the front end in our website, like a marketing inquiry. So we call them marketing qualified leads. They fill out a form that then goes to the manager's email, and then it automatically populates and creates an opportunity in Salesforce, which is our primary sales CRM. And then it also then sends a summary of it to a Microsoft Teams group that we're all part of.
Yeah.
So it's a few different layers, but it's all automated so that it essentially creates an opportunity in Salesforce, goes to Teams, and then we can sort of allocate it and track it through there.
Beauty. We're reducing the actual admin there. And then for you yourself, I mean, you said you kind of do, let's say 200 odd loans a year. That's a lot of business to get through, almost kind of looking at one a day if you're looking at working days. How do you manage all that work? Like, do you follow a particular process? Do you have team members behind you supporting you? What does your process working pod look like?
Yeah, so we've got essentially how we have it structured is we have a couple of offshore admin support staff who deal with the lodgement all the way through till settlement. That's purely their role. Each staff member will take complete ownership of a file. So we get the recommendations sorted with the client. We prepare the file to send to admin, the support staff, send it to them, and then they'll essentially file handle that all the way till settlement. So we have a couple of them who are awesome. They do such a good job and they help the team. Then we have someone based in WA who manages that team. And she's absolutely awesome. She's the glue that holds the team together. Been all sorts of trouble if she wasn't around. So we have that sort of system for the lodgement till settlement stage. And then, so personally, I have a credit analyst who's also amazing, and she essentially does all my document requests, my document reviews, my policy research, my pricing, my vows, the loan strategy itself in terms of not making the recommendation, but actually preparing the document. Because a big part of how we provide additional value to clients, and I guess our niche as an investment firm is, so we have an investment plan / strategy. It's a big 16 plus page document. And then our loan strategy that we give to clients is something that we've created. It's templated in Word. It's not it's not the same loan recommendation you'd spit out from your aggregator. It's much more detailed. So that in itself could take me 2 to 3 hours to complete, just to put the recommendations in a big format table to give to the client. And again, try and provide as much value as possible. Show exactly the changes we're making, the recommended structure, all the different adjustments, what we need to be looking at in the next few months, in the next few years. So it's quite detailed. But even just having my support staff to do that for me makes a world of difference. So we've got that team set up there, and then the systems within the team. So I have a pipeline board that I use Trello at the moment. It does okay. I'm looking at finding something a bit more suitable, but that's purely for just managing pipeline with my credit analyst. And then we've automated some processes for that loan strategy document using Microsoft Copilot, so some AI functions, and creating some agents there. So there's a few different steps throughout the process, but ultimately leaning on offshore support staff. They're the key thing. If you don't have them, you're going to struggle to write good volume. You're always going to hit a peak or a ceiling.
Yeah. Or completely burn out, which we obviously don't want. You mentioned there about AI, and at the Better Business Summit this year, a lot of our conversation was about how brokers are using AI, what sort of things they can be doing to free up some of the admin, to kind of do more of the client-facing or strategy work. What sort of things are you using AI for?
Good question. So at the moment, automating as much of our recommendation process as possible. So I guess the issue with broking is you've got information in all these different spots. Like you've got your CRM, so I put all the client information when I'm doing my analysis. So looking at pay slips, financials, all that in a spreadsheet. So client analysis sheet. And then you've also got Microsoft SharePoint, which has pay slips, all the actual formal documents. So you've got all these different pages and places. The most important thing is the analysis sheet, which is where we put all the client information so that we can then reference it with credit. We can run different scenarios. We can annualize figures, just do all the calculations and everything, workshopping. So we've formatted that spreadsheet so that the information is then transferable into other documents. So the loan recommendation document I mentioned, that's 12 pages. And as I said, it took me 2 to 3 hours to do it myself. But the client information is already in the analysis sheet. So essentially we get the client information in a fact find, then it goes in the analysis sheet, and then it has to go on the loan strategy, then it has to go on Apply Online, right? So we've adjusted the analysis sheet so that the information can be transferred into a Copilot agent. And then, so it can essentially just be copy and pasted in a certain format. And then it summarizes everything we needed to, and then puts it in the format that we can just copy and paste it into the loan recommendation document. So in short, we've just used it to really condense the data entry across different platforms, which is, it saved a massive amount of time.
I was going to say, how long do you reckon it saved?
An hour and a half for each loan recommendation, just purely the document itself. So big time saver.
Yeah. And I guess the next question is, well, what do you do with that extra time? Are you just going to the gym? Or are you like finding new clients? Like, what are you doing with that extra time?
It gets used up pretty quickly. It's just more clients. There's always stuff to do. Yeah. I find whenever I save time, something else pops up.
Yeah.
So
do you use any other tools or tech from outside of your own business? Like, let's say whether that's for broker built tech, or if it's sort of, Calendly, like client management, like what kind of things are you using outside of your main CRM system?
Yeah. Some of the other consultants use Calendly. I don't like it because I'm a bit more flexible with my time. I don't like being really regimented and having everything set up well. And if with Calendly, if you don't have your calendar set up well, then it can be inconvenient. I don't like that people get to pick when they can allocate their time in my calendar. So I'm a bit more fluid in that regard, but the other consultants do use it and they like it. So I think it depends on how, like, I'm an organized person, but organized chaos, you might call it. I don't want to have everything really structured in my calendar, given the nature of our role. Like you have stuff popping up at any moment. Stuff to do with the banks or clients. There's a whole lot of things. So I don't use that. We have been using Claude, the AI agent, to do adjustments with spreadsheets, look at business recommendations, marketing stuff, just, I guess, general advancements, like trying to figure out what we should do next in terms of innovation. Claude is really good, but we use Copilot for a lot because that's the Microsoft based one, and we have all our folders on SharePoint for security reasons and whatnot. So I don't use too much, to be honest. It's a CRM, Trello, and then the agents. And that's pretty much the bulk of it.
You mentioned earlier about referral partners, and obviously there's a big focus on referral partnerships at the moment. A lot of questions being asked about, where is business coming from? Of course, you would have been living under a rock if you hadn't heard about all of the sort of mortgage investigations into loan fraud coming from, or some of it coming from referral partners. So a lot of questions we're hearing from new brokers is saying, well, firstly, how do I make referral partnership work? And secondly, how do I interrogate these referral partners to make sure that they're kosher and not trying to pull a fast one here? What advice would you give someone trying to establish a referral partnership for the first time, particularly when it comes to forming strong relationships?
That's a good question. I think you need to base it on, you really need to know the individual more from a relationship level. So the more you interact with someone, whether it's simply you just going for coffees and such, and they talk to you and they tell you about the business and stuff they've been doing and how they've helped their clients recently, and just the more you interact with someone, the more of a feel you can get for, who they are as a person, their values, their integrity. So I found, and as I said, I only have one referral partner for each sort of other external service. And it's really just knowing that I trust them as a person, and therefore they would I trust their professional advice based on the discussions I've had with them. So really you just need to put yourself out there, just meet new people, talk to them, get a feel for them. As simple as going for a coffee, and then you'll know pretty quickly between talking to different individuals who you feel may be a better suit, who is more personable, who you gel with better. And then it's more of so with our referral partners or mine explicitly, it's never been a remuneration thing. There's no incentives associated other than just providing good service. And that's generally what referral partners want. If they're looking for monetary compensation, they're likely not a good fit because they're in it for the money versus just being able to provide a good service.
Yeah.
So the ones I deal with, it's purely trusting their advice, knowing that they'll look after my clients and therefore it reflects well on me. And the other way around for the people that I deal with, they want to know that who they refer is looked after and it reflects well on them. And then the flow and effect, of course, is referrals to them and me, and it's sort of self-perpetuating. So don't focus on monetary compensation because I think that's the wrong way to incentivize. However, of course, it's difficult if you don't, if you're a newish broker, you don't have a niche, you haven't set up with anyone, it's a bit harder. So I acknowledge that I've been, I guess, a bit lucky being with an established firm. But to align with that, I'd say, if you can get with a larger name business early in your career, that's probably the best outcome for someone who is joining the industry, because then you've got more credibility behind your name. I called people on the database who'd never heard of me, and I'd only started broking, I'd only just started broking, and simply stating the company's name gave me credibility and therefore they gained trust in me. So you kind of treat it the same way with referral partners.
Yeah. We're also going to talk a little bit about the kind of, where else you can generate leads. And you mentioned earlier that your biggest client is actually your ex-employer. And I think a lot of brokers that just start out kind of go to family and friends and people first. Is that what you did as well? Did that end up being that way, or were they already a Momentum Wealth client?
Yeah, I didn't go out to family and friends, actually. It was very much all momentum sort of focused. Yeah, there was enough there for me to mine from the database, so I didn't need to go looking for external deals or external clients. But yeah, that the ex-employer in particular, I knew them quite well, and we had good trust because I was a supervisor for them. So we'd already sort of discussed, and he'd already mentioned I'll want your assistance when you're ready. So when you're ready, let me know and we'll work together. So that was opportunistic based on my past experiences. But more to the point, anyone else who's had similar experiences, if you've worked somewhere else and had good relationships with someone, reach out to them, because if they trust you as a person, generally that's all you need. You don't need to be the best broker or have the best knowledge or skill set. If they trust you, then you're going to make good decisions to better their position and help them out. And that's usually the first point, because all the information on policy and different scenarios, it's all accessible, right? It's all accessible. So if you don't know it immediately, that's okay. You can learn it. So that trust-based relationship.
And was that then a client who went on to take on personal property investment, or was that commercial?
Both. both. Yeah.
Fun.
Yeah. So they've been a good client. Personal property investments, commercial properties, they've been a good client. So,
Awesome.
And that's what started my exploration into the commercial broking industry as well. So I always obviously wanted to get to that. That's a natural progression. Is I don't want to just do commercial. I want to be able to do everything well. But that's sort of what gave me the first look into commercial, and I've been able to leverage off that and now get commercial accreditations and actually be able to promote and write commercial deals.
What do you reckon your percentage, like your sort of resi commercial is?
80 resi, 20 commercial, I'd say. Yeah.
Okay, we're going to take a quick break here, Max. When we come back, I'd like to talk to you about what you're going to be doing in the future, your plans for building your broking career into the years ahead. What sort of things are your biggest bugbears in the industry? If you were king of the broking industry for a day, what would you change? And generally, what you do to unwind and de-stress. And we'll get into that just after this break. So, Max, you're talking there about, having kind of diversified now. You've got resi under your belt. You've learned commercial now as well. Got a few deals under your belt there too. What's next for you? What do you want to be doing? Maybe this and rest of 2026 and into FY27 short-term vision. What are your big goals?
I haven't. Obviously, we want volume to increase. I want to hire a new support staff so that I can work less. I'm still doing lots of days and long hours. So I want another support staff just to help manage day-to-day stuff. Obviously, volume increase would be nice. You want that year-on-year volume increase, but probably look to do more development financing because that's really good return on investment in terms of time allocated. So I've been doing a few development transactions recently, and you don't have to put that much effort and time and energy into them. They're a slow burn and they take a while to come to fruition, but time value for money, it's very efficient. So moving into a more development commercial space and just refining my processes, I need to do, use a better system for my pipeline tracking, sales tracking. So all in all, just making everything more efficient whilst being able to work less myself.
Yeah.
Got 2 young kids, so I want to spend more time with my family without, dropping revenue, essentially.
Yeah, that is the secret sauce, isn't it? So everyone is hoping to achieve, having more time for themselves and their lives while also making more money. Hard balancing act. You mentioned there about having young kids. I was going to ask you what you do to unwind and de-stress. I imagine the children will take up quite a bit of your time, but do you have any hobbies? Or if you have a really tough day, what do you do to try and shake off that stress?
Yeah, you're right. The kids do take up most of the time, but in a good way. If I have spare time, I guess I want to spend it with my family versus an external hobby. So, there's the obvious exercise stuff. I play golf on odd occasion. But other than that, it's family related stuff, nothing too crazy, going for hikes or walks or just playing with the kids. So they're young. The oldest is almost 3 and the youngest is 11 months. So just, spending time with them while they're young because they won't be forever. And I work, 12-hour days, probably 6 days a week. So when you do have spare time, you want to spend it with them. But yeah.
Do you work on Saturdays then?
Saturdays or Sundays. It's kind of sporadic, but I definitely squeeze in some work on the weekends. So whatever that looks like. Sometimes I wake up early in the morning. Sometimes I stay up late at night. Sometimes the kids are out of the house and I squeeze in a few hours here and there. So yeah, I do like a good opportunity to get on the computer and squeeze in some extra hours.
Well, hopefully if you do manage to bring on a third person, is it third person to support you?
It'll be second for me individually, but the support staff that do the loan admin, they're shared between the team members. They're not allocated to, so it'd be a second for myself. Yes.
Yeah. So if you do manage to bring in a second person, hopefully you can free up some of that weekend work and get some time back. But the other thing I want to know is whenever people come in from a different industry into broking, I'm always curious to know is it kind of what you expected? Is there anything that surprised you along the way? But also, is there anything that is really annoying? If there are any industry issues or challenges that you'd like to fix to make broking better?
You know what? Is the most obvious thing, which is everyone will say it, but is the clawbacks. No one likes getting clawbacks, but that's kind of a not selfish thing to say, but it's an obvious thing. Of course, we all want more money with less restrictions. Probably you know what? In WA, we still do wet side mortgages. Absolute pain in the bum. But a lot of the banks still do wet sign mortgages. And then there's some who do half and half, like Westpac do some digital, some wet sign. It's like confusing, and so everyone needs to just do digital mortgage, digital loan documents. They just need just scrap anything that's wet sign. It's too annoying. It's doable, but just the difference between all the banks is so many changes. But they're old, archaic systems, a lot of them, and of course with banks, these big institutions, it's hard to change things quickly and efficiently. So that's expected. But no, there's nothing really, really annoying that sticks out. There's a lot of little things. It is nice when you have onshore credit assessors. Like, I find that makes a huge difference. Macquarie's credit assessors versus some of the other banks. You try to look for reasons not to go to Macquarie for that purpose, because it's going to get assessed immediately, and they're going to call you and use common sense rationale, and it's going to get approved straight away, mostly. Yeah. So using more onshore credit assessors for the banks, that's actually quite a big one. But no, there's nothing obvious like that I see really wrong with the industry or that really annoys me day to day. It's all the little things, but nothing that really stands out that I can pick apart.
Yeah, sounds good. It sounds like you're happy then. I mean, although those are quite big ones, clawbacks, wet signatures, and onshore staff. I mean, yeah. When it comes to then like looking at what's happening in WA, I mean, we actually did a podcast fairly recently with Adam Donald from Capital Finance, and there's lots of changes obviously going on in the WA market, both in terms of like government support and new initiatives and tax changes. What sort of things are you seeing at the moment that's really worrying clients?
Good question. The budget gets mentioned not as often as you'd think. I only had a few people actually worrying about that. We don't get too many concerns, to be honest. Most people, by the time they've come to us, because of the property investment focus, they're already decided that they want to invest in property, and they generally don't have any negative connotations or concerns. It's usually, I've made the decision, now I'm reaching out, which is what our marketing is attracting. We're attracting people who've already made a decision versus people who have only just started thinking about a topic. Like a lot of marketing, like Facebook and Instagram, for example, it's sort of meant to spark interest before people have actually made a decision to do something, whereas we're at the end of the funnel, they've already made a decision. So what that means is that when clients come through, they're generally ready to go. They've made a decision. It's just us providing them some supporting advice and guidance. Sure, some people have concerns. I mean, outside of budget-related things, the most obvious one would be, is the market overheated? Are we at a top? Like, it's been going so well for so long, surely it can't carry on, which is quite easy to talk to, because the purpose and the drivers behind the property market is fundamentally the economy and supply and demand, right? And the supply and demand imbalance is just huge, and plus migration for the third point. So you got high migration, reasonably strong economy, and very low supply and very high demand. And so, well, none of that's changing. So interest rates can go up, sure. You can make changes through the budget, sure. But fundamentally, there's no supply. So prices are going to go up. Yeah. So, we're very short on homes. They're not, and building over here is really inefficient. They're not building enough homes. Building completions are poor. Building approvals are low. There's no end in sight. So it's really been a perfect storm the past few years, and we're not seeing anything that's going to stop that in the immediate future, other than prices being so high that they're tapering on unaffordable, but they're still not quite there yet. So
if you then could give any advice to any brokers who are just starting out as, let's say, a property investment advice broker, or just generally as a broker, what sort of top tips would you give them? Is there anything that you wish you'd known when you first started?
Very good question. Nothing I wish that I'd have known, but there's probably two most important things I'd say. The first is you're not going to be an exceptional broker by just doing 9 to 5. Like, broking isn't an easy role, which a lot of people actually think it is. A lot of misconceptions. No, it's actually very difficult, time consuming. And if you want to do well, you definitely need to work more than 9 to 5. So that's the first thing. Secondly is you need some form of niche or competitive edge in the market, because there's a lot of brokers out there. There's a lot of established businesses. It's quite a diluted market. A brokered market share is going up every month, it seems, or at least yearly for the past couple of years, which is great. But there's a lot of brokers out there and very big established businesses. And, you've got, big established brokers who are servicing a lot of clients at any given time. So you need a competitive edge. What does that look like? I'd say your best bet is to join a very large firm and that operates well and understand their processes, their efficiencies, how they structure their deals, their offshore staff, how the business runs. Like, learn from the big businesses. And then if you want to, go out and do your own thing, cool, that's fine. But I think you need to get a foundation from a well set up, established business, because otherwise you can learn poor practices, or you're just not learning everything you can. And you have way less credibility if you're with a smaller business, or you just work for yourself and you're a brand new broker. How do you give anyone any confidence when you're writing the first deal or your 10th deal and you're a brand new broker? You need that niche or that edge, or to be with a big name at least. So I'd work extra long hours and try and start somewhere established, or really develop a niche where you can capture clients and provide value.
Awesome. One final question for you, Max, which is around the types of lenders you're using. Are you using mostly banks, non-banks, private lenders? What does your kind of typical top 10 spread look like?
It's very well spread, very, very well spread. So I do pretty much everything other than personal related loans and car loans. So resi, development, SMSF, commercial. I do a bit of private lending for development transactions, purely being for development transactions. However, I've just used Westpac Property Team for a development deal, townhouses in Hillary's. I would say 30 to 40% is major banks, just resi stuff. Westpac and ANZ for pricing, Bankwest and CBA for policy and efficiency, Macquarie for efficiency. And then it's, spread between more non-banks with high borrowing capacity for, because the more investment properties you get, the more all the buffers you're getting on, servicing starts to dwindle. So I do a fair bit to, MA Money. They're really good rates for their servicing. And then, stuff like Resimac and Liberty and all that sort of stuff. So there's a spread between those two. And then, private lenders. And for SMSF stuff, I usually use Blue Bay, because they're one of two lenders that allow an offset facility. So the processes aren't amazing. It feels like pulling teeth sometimes, but they have the offset facility. So, quite a big spread. But
are there any product niches where you're like, you know what, we could do with a product that does this, like that maybe isn't currently available or isn't widely available? I mean, like an SMSF with an offset, for example, I didn't even know you could do that. Is there anything else that you're like, this would be an amazing product to have?
There probably is, but not off the top of my head. I reckon if I think hard enough, but...
Just 110% LVR,
yeah. Hey, Liberty kind of do that. They will let you go over 100% LVR with LMI capitalized. So you can do that. It will cost you an arm and a leg. It'll be 10%. So no, there's actually nothing that's glaringly obvious. I think there's probably a bit of a gap for development finance, but for standard residential stuff. So when you're looking at property development, say just like you're building 3 or 4 properties or something like that, the only bank that will let you do an 80% lend on 4 properties on one title is Bankwest. And even 3 properties on one title, the other lenders will do it, but it's 70%.
Yeah.
So I feel like there's room there, because room there for better policies, because it's quite common to, bowl a property over or buy an established one and do like a triplex, build 3. But 70% versus 80% is quite a big difference in how much equity is required. So something like that. And I am seeing actually a lot of bridging loans at the moment, and heaps are going to MA Money, because actually here's one. All bridging facilities, or most bridging loans, they'll do 12-month time frame, which is impractical in the current market, because things will sell in a few weeks here. So that's something that's missing, because when you do 12 months of capitalized interest and then you put buffers and everything, all of a sudden the equity position reduces and therefore purchasing power. So I use MA Money a lot because they'll do 6 months bridging product and therefore less capitalized interest and therefore more purchasing power. So little things like that, but you can only adjust so many different policies with different banks, and then the market changes and you need to adjust them again. So I can understand why it's 12 months at the moment, but yeah.
Well, you never know. Lenders listening might be like, we'll do that. So there you go. You put it out there. Maybe you'll manifest. Max Miorada,
Yes.
thank you so much for your time today and sharing your story with us here on the Elite Broker Podcast. And congratulations once again on becoming the Editor's Choice Award for WA 2026.
Thank you, Annie. Absolute pleasure. Thanks for having me.
If you've got any questions for me or for Max, and do feel free to reach out. You can reach me at editor@theadvisor.com.au, of course, Max at Momentum Wealth, and take a listen back to previous episodes of Elite Broker. They're all on the podcast, the Advisor Podcast Network. We've got about 10 years worth of podcasts now, if you can believe it, from elite brokers, new brokers, women in finance, what's making headlines. We chat about the news, In Focus, where we're looking at the big themes in industry from the lenders and the aggregators, and much, much more. You can check them all out on the Advisor Podcast Network. If you're interested in learning more from our events, you can come along to New Broker Academy, which is taking place in the rest of June in the Eastern Seaboard. And then later this year, the 360 SME Finance. If you want to learn about diversification and how to write commercial loans, will be coming around again on that roadshow to do a deep dive into commercial lending. You can find all of those on theadvisor.com.au if you're interested in finding out more about our events too. We'll hope you have a great week, and we'll catch you next time for another episode on the Advisor Podcast Network.